All right. Good morning, good afternoon, possibly good evening. I have absolutely no idea what time zone you might be joining us from, but hey, tune in, turn on. It's time. We've hit our official start time here, so please chat in. Let us know that you hear us all right. Turn on the. I'll even turn on the camera here in just a moment if you are so inclined. But welcome everybody. You should see on your screen it says Ultima Alert. My name is Don Kaufman. I'm going to be joining you here for about the next 90 minutes or so. So again, we're going to get started here momentarily. I'd like to start with a few informalities. Number one, hey, feel free to chat in where you might be joining us from today, just for my own curiosity. If you see me looking around over here, I've got a lot of different monitors up and running today. So yeah, sounds good. Fantastic. Chicago-ish. Okay, it's cold. All right, I got it. It's cold. Nobody ever says Illinois, it's Chicago-ish. I got that one. It's awesome. Fantastic. All right, so everybody hears us all right, sees us all right. Pretty much good to go. Good time to get started. I'm gonna be drinking a little caffeine along the way here today. Awesome. I actually recognize a couple of the names in here. It's good to see a few of you. Haven't seen you in quite some time. So anyway, yeah, so I am actually on the island right now. I'm gonna head back to Arizona in about a week for a few more weeks, but I kind of go back and forth between I'm in St. Croix. I know it's not like a great background for that, right? If I could flip the camera around, you would actually see nothing but ocean. So we are about 100 yards back off the ocean, which, by the way, here on the island is about as close as you ever wanted to get to living on the ocean. If you're about 100 yards back, that is it. I have seen an angry ocean during a storm, and it is not good, I tell you, not good at all. So a few informalities here throughout the course of today's presentation. One of the things that always comes up is people ask me if it's live. Yeah, it's live. This is when Jerome Powell today said something, and this is where we presently are at absolute lows inside of the marketplace. You have to love that. Anyway, with that being said, welcome everybody. That's one of the first things is, of course, you can ask questions. I'm reading in real time. By the way, if I ask questions of you, please, these are not rhetorical questions. Jump in at any time throughout the course of today's presentation. So it's live. You can ask questions. Let's get right down to it. So Ultima Alert. What you're watching is a TheoTrade presentation. Again, welcome everybody to High Probability Income Generator. Ultima is an entire genre of trade. And I'm going to tell you this right up front because it's something that comes up, constantly. If you've tuned in, anything that we've done really in the last 3 years since the onset of COVID, we've been talking almost exclusively about Ultima because it's been an incredibly successful trading strategy. And as I said, I've expanded it to an entire genre of trade. So what we're going to be talking about today is specifically Ultima Alert. Again, high probability income generator. My name is Don Kaufman. This is a risk disclosure. This is ours. This is not yours. We're not financial advisors nor a broker dealer. I always mention that because I spent a long portion of my career on the brokerage side of things, and I am out. I am out of the contest. We'll talk a little bit about maybe my background here in a few minutes. Next, a few housekeeping items. Listen, I'm going to go through a huge amount. Those of you that have even been through these Ultima, discussions, and I'm curious, there's a good number of people actually tuned in live right now. How many of you have actually seen one of these Ultima presentations? You just say me. By the way, again, this is the part where it's not rhetorical questions. So if you've actually seen one of these presentations, every time I go through this, like literally every time, some of like the first example will always be the same, but after that, it's about live trading. It's about what's going on in the marketplace. Again, this is an entire genre of trade. So I go through a huge amount. I always say, shut the door, turn off Skype chat, whatever else might be distracting you. Close Facebook, get rid of Facebook permanently. Phones on silent mode, definitely kick out the kids. You have kids, get them out. They're out of the contest. Look, you took the time to be here. This is important. Focus on being here. Our gift to you for staying with me right until the end of today's webcast, we are actually going to provide you the auto expected move indicator. This is it's critical. I mean, this is what drives trade on a day-to-day and week-to-week basis. For those of you that are not familiar with the auto expected move indicator, basically these lines, okay, are handicapping, all right, forward risk in the marketplace. In fact, one of the things whenever I do a presentation like this, I don't like to use screenshots. I like to use the live market. It's why I actually, do this during the trading session. Anyway, here is the auto expected move. All right. Again, what it's kind of handicapping is this is the option market depicting risk moving forward. For those of you that know anything about the marketplace right now, options more than ever, they're driving the flow. They're moving the entire marketplace. And to be able to look at the upper and lower edge of the expected move, it's what the option markets on a weekly basis are handicapping risk to be, okay, for the week. And you can see markets stopping cold, all right, reversing off of it. It's phenomenal. Again, it's one of the greatest indicators in this business unequivocally. Like last week, I just want to show you something. Last week, the SPX, the mother of all products, okay, hit the upper edge of the expected move, okay, to the penny. Literally hit. And that's something that this is not like form fit. These are lines that are drawn on a screen, okay, and are static. They're there for the entire week. So it's an indicator we provide to you. And people always ask, well, why? Because we want people looking at it. This is what we talk about incessantly. We talk about every single video that I do, like a weekend update, an evening video, always mentions expected move. We want you to be able to access that and to know exactly what we're referencing. So stay with me right until the end of today's webcast, and we will provide you a link to be able to grab the expected move. All right, down to business. This is why you're here. So we're going to talk about Ultima trades and why they're so ideal for the current environment. As I said to you a moment ago, Ultima is an entire genre of trade, okay, to generate monthly income. Next, you're going to learn a trading symbol that professionals use on a daily basis to create Ultima trades. You're going to learn how and where, okay, to find edge as a retail trader. So also critically important, reap the benefits of high probability trades while learning little known secrets not to take large losses. So we're going to talk about extremely high probability trading strategies, but more appropriately, okay, mitigation of risk on the back end of it. You're going to find what products, when I say products, stocks, options, futures, what's going to work and what's going to be a recipe for disaster, right? So here's a bit about me. My background, I like to kind of explain this a little bit. So I watched order flow for the better part of 15 years. And it is in large part what's kind of brought me to this point. And I say this point is TheoTrade. Let me explain from the get-go here, okay? By the way, somebody was asking about that study. The study is coded for thinkorswim. However, ChatGPT can actually convert it now instantaneously because I've already done it. You can convert it into a multitude of different languages instantly. Okay, so you're fine on that front. I can even give you the other copies. So as I was saying a moment ago, I watched order flow for 15 years, and that's kind of what brought me to this kind of point. It's a pretty unique skill set. And there's only, probably a handful of people in the entire world that have actually watched flow for that period of time. What order flow is, and I'm starting with this and kind of backing into this, but what order flow is, I got to see everything that you did from basically 2001 to 2015, right? I worked at both thinkorswim and TD Ameritrade at the executive level, where we got to see flow. We got to see all of your trades. And moreover, like when I say see trades, I'm not just like looking at them. We would actually do, okay, all types of studies, okay, a little bit of like post-mortem, if you will, on all of your trades. And I have to tell you something. When people ask me about particular trading strategies, I don't mind saying, listen to me, the buck stops here, okay? I've seen everything. If you tell me like, oh, I did this iron condor, I can tell you the probability of success of an iron condor over, any of those years, whether you made money, whether you lost money. If you tell me a covered call, like the probability of success in every major trading strategy, what you're going to learn here today comes from literally having watched billions in other people's mistakes. And it's one of the things that I always stress when I kind of get into this a little bit today. All right, bear with me here one second. All right, I'm already losing my voice. It's okay. So it's one of the things that I expressed to you is we got to see everything that you did and we actually studied it. That's how, as an educator, I mean, again, I ran, okay, but first built education at thinkorswim and then ended up running education over at TD Ameritrade for their 7 million clients. And the way that we ran education is by doing analysis of traders. And that's how we know exactly what works, what doesn't. And again, what you're going to learn here today comes from the knowledge of where people actually lost literally billions of dollars. So people constantly ask me how I got involved in this business. I grew up around traders and trading. Started trading in the late 90s, a short time after I was there to join the startup. I was actually invited to join a startup. Nobody ever had heard of it before. It was called Thinkorswim. This is 2001. I was on the executive team. We took the company public in 2007. TD Ameritrade bought us in 2009. I signed a 5-year lockup from 2010 to 2015. I actually exited in early 2015. We built TheoTrade, which you guys are attending right now. In the beginning of 2016, we launched it. So it's a little background on me. If you ever need to get a hold of me after today, just go right here, support@theotrade.com. I do some TV broadcasts from time to time. This is TD Ameritrade TV. This one, of course, is CNBC, myself pitted against Kevin O'Leary. Just always use that one because it's probably one of the more memorable people that I've been pitted against over the years. This is also fairly recent. This is, when I say fairly recent, this is December of 2022, just a few months ago. We here at TheoTrade kind of took the cover of Investors Business Daily. How many people are familiar with Investors Business Daily? So it's not the most popular topic of conversation, but I'm going to get down right to it. And that is that quote right there. This has actually been the best year since I've had since 2008. That's a quote specifically from me. And that's because last year was a stellar year. It's the best year we've had yet. And everything that we did last year was wrapped around Ultima, which is exactly what we're going to talk about. Look, volatility's arrived. It's not going to abate anytime soon. Inflation's still running red hot. That statement, inflation is running red hot, may have not resonated with you 3 or 4 weeks ago. It does now. Fed pushing rates higher. By the way, if you guys have not heard, look at the marketplace specifically today. Testimony has come out from Jerome Powell saying that they may actually have to push rates harder for much longer than previously anticipated. The markets, they're not coping very well with it. Financials are leading the pack to the downside. Leading to the downside, the banks. Okay, which is interesting because interest rates would be going higher, but no, this is going to be a Mr. Toad's wild ride from this point forward. Anyway, strong dollar. Exports inflation, if you're not aware, the dollar exploded today, just exploding higher. Look at the move in the dollar. There's only a few moves that are that significant to the upside. Yeah, today is one of them. Dollar obviously exploding higher. It exports inflation and geopolitical risks continue to proliferate. That's an understatement from the news last night. Anyway, with that, game on. Like, what I just mentioned in the aforementioned slide, right? People look at this as being a negative, and it is. I mean, look, it's a negative if you always want the marketplace to go up, okay? If you are a geek like myself and you're into Ultima, it doesn't get better than this. And I want to make that clear. Markets, they got real in 2022. Like, forget about the fact they were up 20%, down 20%. Yeah, they were down 20%, okay? But you have to come to the rationalization right now. Stock picking and Reddit boards are not going to cut it. Okay, so the 25-year-old kid living in mom's basement that is, spamming different Reddit boards that crap's not going to work anymore. Now you're actually going to need to strategize. You got to embrace the volatility. You can't rely on directional bias. If you rely on directional bias, you're already dead, right? And I want to make that very clear. That's not an anti-chart statement, but I am here to tell you that, look, when I say rely on directional bias, if you're just getting purely bullish or bearish, right? I want us to go up, I want us to go down. What happens almost on a daily basis, you get, the Fed involved. It's like a coin flip every other day. I mean, this morning was exactly that. Did we know what Jerome Powell was going to say? No. Did any technical analysis help us in the assessment of what Jerome Powell was going to say? No. Okay. And it just goes from there. Look, you got to reduce risk while substantiating monthly returns. Like that's what you're here on. When I say, game on, like really embrace the chaos. Now, down to business is, what are ultimate trades? Because that's really what we're going to reference today. Well, higher volatility has resulted in significantly more options premium. That makes the option prices higher, right? More risk equates to significantly higher option prices. Well, ultimate trades, in their most simplistic form, ultimate trades are designed to sell options premium, but at the same time, we're going to reduce risk. We okay with that idea? Anybody? All right. It's pretty quiet over there in that chat room. You know what that chat room's there? For us to be able to communicate with you. So by all means, I just want to make sure everybody's on the same page. Now, when it comes to ultimate trades, all right, again, I kind of said the O word, learning to sell options. So we are going to talk a little bit about options today. And people constantly hear through the grapevine. And it really is like, it's like the grapevine of traders. I'm going to sell me some options. I'm going to sell me some options. Okay. And it's a great way to be able to make money. But then you turn around, you experiment with it. How many people have experimented with it? Huh? Anybody? You experiment with options? Right? I said the O word. Well, what happens with a lot of people with options, especially when they experiment with them, they make a little money, 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 they make a little money. Bam, they get hit by a Mack truck and you go, what happened? What happened? Okay. And what happened is you got optioned. Okay. They don't understand that just going out, okay, just going out and trying to sell options, what's your risk management? When it goes against me, I'm going to get out. Okay. You're already dead. And you have to know that. Like, look, this business is not just a knowing about like, I need to sell options. I need to buy options. If you are going to go out and sell options, there needs to be a complete genre of trade wrapped around that. Like there has to be a tactic. If you think that you're going to be able to use like stop orders and stuff, oh, come on, people. It's 2023. Like that stuff's just not going to fly. And I know that everybody thinks they're going to outsmart the markets and so forth. You're not here to outsmart the markets. All you have to do, okay, is have good risk management skills, but you have to know specifics, the nuts and bolts behind, for instance, what to trade, when to trade it, and more importantly, how to reduce risk. Because everybody that experiments with selling options knows full well there's a whole lot of risk. So today's session, we're going to separate the myth from the real risk, the fact from the fiction, okay, and about selling options premium. So even if you know nothing about options, like do not panic, all right? You can do this because I know that people come in and they go, I don't even know like the first thing about what an option is. How many people here truly are brand new, have no idea what an option is? Just a Y for yes. Okay. Anybody here brand new, have never traded an option, right? Only like a couple people. All right, that's cool. Well, you're going to learn a little bit today, a few of you. All right. And then I can tell you right now, there's quite a number of people that are joining us today that not only do I know the names, okay, but there's quite a number of people. They know their options. And what's kind of cool about this particular presentation, I've done it enough times that I know, like, I'll gear this a little bit for the novice and a little bit for the extreme, but everything in between, right? So that's why I say, don't panic. You can do this. One of the first things I want to mention right up front, it's going to come up all day long. People constantly fight me on this. Number one thing they fight me on, you do not need a lot of money in your account, okay? In fact, I'm just going to throw it out there right now. I intentionally got so annoyed with people about this that I went and opened $5,000 account, and this is a $5,000 account. I'm going to open a $5,000 margin account just to be able to display to you. You can do whatever you want, a $5,000 account, right? By the way, I use both the thinkorswim platform, thinkorswim, okay, and I still trade a little bit on thinkorswim. You can see I got some P&L there today, and then I also trade much more extensively now. Here, I'll open up all of these. I trade extensively now on TD. So I do kind of straddle both platforms over here. For those of you that do not know this, thinkorswim and TD were the same founders. I was there when we built thinkorswim, but I wanted out of the brokerage business. By 2015, pull me out of there. I'll never go back to the brokerage side of the business. Even if they paid me, I still wouldn't do it. So I make that well known. I want nothing to do with FINRA or the SEC anymore. But it's a phenomenal platform, and we're going to discuss what you can do, what you can't do. So again, small accounts is phenomenal, right? You don't have to worry about margin for what we're going to talk about today, and everything that I explained today can be done in retirement accounts. So if you're going to ask me along the way, you're going to fight me. Yes, you can do this in a retirement account. There is an IRA in here. Yes, you can do this with as little as $2,000, but you do have to have $2,000 in the account. So let's dive right in. Look, for starters, okay, we're going to go easy on you, right? One of the first things I want to tell you, there's a lot of different facets of selling premium. Selling premium. What does selling premium really mean? It means selling options. Now, some of you have no experience whatsoever, don't even know what an option is, but you got to understand selling premium can be called credit spreads. It could be called bull call spreads, bear call spreads, bull put spreads, bear put spreads, short call spreads, short put spreads, selling, naked, delta, neutral, mambo combos, conversions, reversals, and back spreads. And oh my, all of those can be construed in some way, shape, or form as selling premium. Like seriously, all of these can be construed as selling premium. But selling premium, it can be used to create bullish and bearish trades. But for today, I'm going to be predominantly market neutral. What does market neutral mean? It means I don't care about no stinking direction. By the way, I threw this in here. How are members doing year to date? This comes from February 21st. Christian said, yeah, 100% agree. I spent the first 19 years trading without making any profit. But then last year, joined TheoTrade, and I'm finally profitable. Don's Ultima strategy. The reason I threw this in here is because, well, this gentleman, Christian, specifically mentioned the Ultima strategy. And now I'm dipping into intraday trading, doing very well, taking off several trades profitably. Just, okay. This comes from James back in November. Predominantly follow Ultima, and year to date up 30%. The reason I mentioned this one is it's in November, and this gentleman's actually up about 30%. Okay, so as I say, down to business here again, probability and profitability. One of the first things that is, I think, imperative to understand in this business is that, well, everything that you do in trading is based on probability. Everything you do. You buy a stock, there's a probability associated with it, but options are especially associated with probability. The one thing that I want to stress to you is I don't want you to confuse probability with profitability. I'm going to say that again. The only reason that this slide is even here, do not ever confuse probability with profitability. So time out. The reason I bring this up every single day here at TheoTrade, we presently serve, okay, just over 6,000, okay, clientele. There are 6,000 clientele on the TheoTrade site, okay? And when I say the TheoTrade site, it's TheoTrade, okay? It's a TheoTrade site where we actually have chat rooms and all this stuff and, different trade alerts, and okay, but there's 6,000 people on there. Our people understand that there's a big difference between probability and profitability. But I get emails every day from the outside, and people ask me, what's your track record? How often are you right? And I go, whoa. Who the hell cares how often am I right? I'm right over 95% of the time. That doesn't necessarily make me money. Okay. It's funny because I mentioned this to people. Some of our own advertising says 95% of trades. absolutely unequivocally correct. All right. Last year, we had even better, like a 97% track record. 97% of the trades worked last year. That doesn't necessarily mean, though, that you're making money. Don't ever confuse that. Probability alone does not make you profitable. Markets are always going to be a series of trade-offs, right? Higher probability can actually be higher risk. You could be right 90% of the time, you can still lose money. And I like to be very fair and two-sided. I don't like, when I hop onto webinars and people are like, you're just going to be sailing off into the sunset. Okay, which is actually a perfect term, because for those of you that joined a little bit late, I'm broadcasting from St. Croix in the US Virgin Islands. Why? So I can sail off into the sunset. Actually, I really don't want to get on a boat. I live like 100 yards off the beach. I've had enough water. It's right there. Don't need to get on a boat to see it. Anyway, what we're going to talk about over here, though, is how are you going to be profitable and where can you find edge? Forget about what you think about this business. Blank it out of your head. You're not going to need a lot of money to do this. Okay. We got to separate, again, myth from real risk. And what people are really here for is to learn just that, learn to where to find edge and how to manage some of that risk. So let's get down to the idea of probability and premium selling tactics. So one of the first examples I always do. Okay. And this is one of those kind of mainstay examples. There's a lot of people that are coming to us today that are almost embarrassed because they don't understand options, right? First of all, listen to me. Don't be embarrassed if you don't understand options. Like everybody has to get started somewhere. Now, in all fairness, people constantly ask me that question. Well, Don, where did you get started? I have no idea. I literally grew up around it. Some people like, I don't know, you grow up in like a family, you learn sports. You grow up in a family, you learn this. In my family, okay, there were traders. We grew up, I remember going to the floor as a child. So I don't remember learning what a call or what a put is. Okay, I am a little bit of an anomaly on that front, and I'm like literally don't really remember that. But I remember like Thanksgiving dinners where people were talking about like, I was in the money, out of the money, and so forth. So if this is your first time in options, just, hey, look, grasp the big concepts, right? So first, okay, options, I was talking about all the strategies. There's an iron condor and a mambo combo and this and that and all these different strategies. Put all that garbage out of your head, okay? Look, in this business, you have calls and you have puts, okay? You got calls and you got puts. What else do you need to know? Huh? What else do you need to know besides calls and puts? Oh yeah, you can be a buyer or you can be a seller, and that's it. So in this very first example, all right, we're going to go out, okay, and we're going to sell a 120 call. And it's going to be trading for exactly a $1 credit. Now I'm going to put that down here, right? We're going to sell a 120 call, okay, and we're going to collect exactly a $1 credit. Now I'm going to make that thing good for the next 3 months. Now, we just jumped right into that one, okay? Some people are thinking to themselves, I don't even understand what a call is. That's good. Next question is, do I own the stock? Nope. Okay, look, in this example, here's a stock. Stock's trading at $100. Do I own the stock? No. Why do you not own the stock? Because I don't want to own stock. Why don't you want to own stock? I don't know. It's volatile. Next thing is I have to put up $100. Next thing is it's a huge amount of margin. Next thing is it's volatile. Like I can go in a circle over here all day long. It's volatile and I don't want to put up the money. You realize you have $100 stock can go down like $5, $10 like that. Okay. Or they could fire everybody and the stock rallies huge. Think about that one for a second. That's a Facebook. I apologize. The artist formerly known as Facebook. The caffeine is starting to kick in. It's good. Anyway, with this, you have $100 stock. I have no intention of owning the stock. I don't want to own the stock. Stock right now, the heavy volatility, there's nothing wrong with owning stock, but stock right now and heavy volatility can be a whole lot of risk. So I'm going to go out and I'm going to sell a 120 call. And people go, whoa, 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 whoa. See, in options, you can be either a buyer or a seller. If you buy a 120 call, buying a 120 call, what does that do? Don't worry about the sell side just yet. By the way, I keep pointing to this monitor like I'm actually touching it now. Don't worry about the sell side yet. Let's talk about buying a 120 call. If you buy a 120 call, it gives you the right to buy the stock at 120. You see, options, okay, have two different sides, not just a buyer or a seller. Options have rights and options have obligations. Buyers have rights, sellers have obligations. Every time an option trade happens, doesn't matter whether you're a buyer or a seller. There's always a buyer or a seller, period. I don't care whether you're the buyer or seller. Right now, though, you need to understand, when somebody goes, oh, look, somebody just bought a bunch of option contracts. Good. That also means somebody just sold a bunch of option contracts. Like, nobody ever thinks that way. Okay. Are you the buyer or the seller? Buyers have rights, sellers have obligations. If you bought the 120 call, it gives you the right to buy the stock at 120. What'd you pay for that right? $1. What's the probability of making money? Not good, because where does the stock have to go for you to make money? It has to go all the way past 120. That is a big, big boy move, right? So that's the 120 call. Like a 120 call, that thing is 20% out of the money. It's in the nosebleed seats. It's not even in the nosebleed seats. It's in the parking lot, tailgating, having a beer while the marketplace is at 100. Does that make sense? Okay, probably not. Do I need any more strange analogies? But getting to 120 seems like very, few and far between. But if you ask me, hey, Don, why is the 120 call trading for $1? There's always a chance the stock could go to 150. Could the stock go from 100 to 150? Of course it could. It could be taken over. The stock could go to 150. If you actually, if you have the right to buy the stock at what, 120, and the stock goes to 150, what could you make? Huh? What can you make if you have the right to buy the stock at 120 and the stock goes to 150? You have no intention of buying the stock. You don't have to buy the stock, but what's a 120 call worth with the stock trading at 150? Well, if you have the right to buy the stock at 120, you could buy the stock at 120. You could sell it to somebody for 150 and you could make $30. $30, of course, minus the dollar you paid for it, right? But that's the buy side of options. We're not buying options. We're selling them. What are we doing? We're selling them. Why are we selling them? Because it's just more fun. I'm going to sell a 120 call. Now, look, in this particular position, this is going to drive everybody crazy, right? I'm going to sell the 120 call and I'm going to sell it what we term naked. Naked. What's the first thing they tell you? Don't do it options. Don't ever sell naked. Look, this is not the strategy. What I have to have you guys understand, though, is where we're headed. I need you to understand how edge, is formed in this business. Before we can get into like, how am I going to make money? You need to understand edge. Are we okay with that? Yeah. I'm going to pause for a second because I want to make sure everybody's on the same, the same level playing field, right? So the one thing is, all right, we're going to talk about selling an option naked and everybody's going to go, what about the margin? How about if I told you there's a way to circumnavigate margin? You can circumnavigate margin. You can circumnavigate the day trade margin rule. If you haven't figured out how to get around the day trade margin rule, you need us. You need us at that point. Anyway, I'm going to go out and I'm going to sell a 120 call. Now, if I sell a 120 call, selling an option, by the way, palms to me, I'm a buyer. Palms to you, I'm a seller. I'm going to sell the 120 call. I'm going to sell the 120 call and I'm going to collect a whopping $1. $1. Now what do I do? After I sell the 120 call, you go, it's going to tie up margin and I'm naked. Hold me, I'm scared. Like, look, we're just going to sell it and then we're going to do nothing. Are you going to sit there for 3 months? Sure, we'll sit there for 3 months. We're going to sit there for 3 months and do absolutely nothing. Look, I need you to understand this trade from a probability point of view. Number one, what can happen to you after you sell a 120 call for $1? Well, you could keep the $1, but how long do you have to have this thing for before you get to collect $1? A full 3 months. You're like, oh, seriously? I'm not going to sit through the next 90 minutes, Don, to learn how to make $1 the next 3 months. You're not, but you have to understand probability conceptually. Number one, the stock could stay flat. If the stock stays flat, you keep your $1. Number two, the stock could go down. If the stock goes down, you keep your $1. Number three, stock could go up. Stock could even get to 110. Okay, you're going to keep your $1. Stock can go to 115. You will wet yourself. I guarantee you'll wet yourself, but you'll still keep your $1. Even if the stock goes to 120, you'll keep your $1. Only above about 121 do you start to lose money in this trade. And of course, you're going to ask me, what if it goes from 100 and jumps to 130? Okay, there's an answer for that. It's called, you're screwed, right? You're in trouble at that point because You're basically short stock at 120. The stock goes to 130. You're like, oh, you're going to lose $10 of which you collected $1 up front. That's not going to look good. Okay. We're not going to take that kind of risk, but I want you to understand. Okay. Again, I want you to understand just from a conceptual point of view. Tell me something. Is this a high probability trade? Conceptually speaking, is this a high probability trade? Anybody? Anybody? It's an extremely high probability trade. I'll say that again. How do I know it's an extremely high probability trade? Well, first of all, the stock has to go up 20% just for you to start to lose money. 20% move in any stock is big. Maybe not GameStop, but any other stock is big. It's an extraordinarily high probability trade. This trade, okay, is better than a 90% probability. That's one of the first things to understand about this. But of course, everybody turns around and they go, excuse me, sir. Why sell options so far out in time? The 3-month thing, okay? I'm going to shock you with this. Maybe you've noticed in my example, I sold options out a few months in duration. Typically, traders sell short-dated options. But people, this is exactly why you're tuning in to this webcast today. All the rage right now, I love to address this, okay? Oh, we're going to get to that in a second. All the rage right this moment in this marketplace is called 0 DTE, okay? I expert in 0 DTE, okay? If 0 days to expiration, that's what that means. 0 DTE means 0 days to expiration. If that worked, don't you think I'd be selling it? By the way, I happen to work for the individuals that came up with that idea, right? I was one of the people in the room that originally promoted the whole idea of weeklies and daily expirations to the Chicago Board Options Exchange all the way back in 2004, all right? Not just in the meeting, I was doing part of the presentation. In fact, I was the guy running the presentation, right? We know these better than anybody on the street. And I'm telling you right now, typically traders want to sell shorter duration. It's why you're going to tune in over here. Criteria is what we talk about, right? And I got to tell you, this is what they say, like, oh, look at the decay graph, man. The closer you come to expiration. This is the biggest fallacy going in the marketplace. Now, to prove that to you, okay? And this is the part that I get very adamant about. We're going to go in to a live market right now. We're going to go right over here, okay, onto thinkorswim. By the way, at this point in the presentation, I want to make sure that everybody understands what it is we do here at TheoTrade. TheoTrade is built and designed to educate and alert based on many, many trade facets. When I say educate and alert, we run portfolios from TheoTheta, okay, to Spread Tracker to Catapult, okay? What these portfolios are for you to be able to execute and follow. We educate you, okay? But then we also provide trade alerts. Everything that we do here, and this is where the real reason I'm showing you this, everything that we do here at TheoTrade is completely no holds barred, total open, okay? You can see every balance, every account that I have. I cannot freaking stand when people are like, oh, well, look, I'll show you my balance every damn day. I don't care. Okay. Like, what else do I have at this point? Look, earlier the week, I was at 325. Obviously, this is a weekend. Okay. Lost a little money yesterday. I'm up a bit today. Look, my P&L today is up about 9 grand. On any given day, my P&L should move anywhere from about 10 to 15,000. Okay, that is not, there's not a huge amount of money in this particular account. This account's $330,000. Okay, I run a few $1 million of capital spread through a multitude of different accounts. Okay, both here and of course on Tasty Trade. So you, as I say, everything that you want to see is here. Every nuance of every single trade, every balance, how much we make, how much we lose, it's completely, okay, open to you. And it's the most important thing about what we can do here at TheoTrade is utter transparency. Okay, have I had a bad year? Of course I've had bad years. Like that's trading. You know, as I said, I grew up in this industry, started making markets in 98. 3 years later, was already like running a portion of thinkorswim. It's all we know, right? And you're going to have up years and down years, but complete and utter transparency is what is so critical. You know, like I like when people like, hey, look, it keeps me honest. Like, hey, take a look at the balance over here. If I have a really crappy day, you'll know about it. Okay. Actually, I don't usually get too hopped up about that, but it is what it is. So we're going to come in here and I'm going to do a trade exactly like I just showed you 3 months out. And I'm going to tell you exactly why here. Okay. So let's use a product called spiders. Now, the reason that I use spiders, it's the marquee of all marquee products, right? Like if there's one product it's the most liquid animal in the world, it's the spiders. Take a look. The spiders today, this is live, right? Have already traded 6.65 million contracts. Now there's other products that actually have more notional value. Nothing trades more contract size. Nothing trades more contract size than the spiders. Okay, this is going to do 12 million contracts probably today. 12 million, 10 to 12 million easily. We're going to go out exactly 100 days, right? We're going to go out 100 days. Why am I going to go out 100 days? Because I told you that I was going to go out about, 100 days. So in this particular case, I'm going to go out 101 days. And I'm just going to find a way out of the money option to sell. In this case, I'm going to use these 450s. So just hang with me because this example is critically important to your understanding of what Ultima, is based on, right? We're going to go out right now and we're going to sell, In this case, it's the June 16s, right? So those are June 16s. The 16 June 450 call. And we're going to collect. Well, here, it's guaranteed to hit $1.02. We're going to collect $1.02 for it. All right. Time out. That's it. That's the trade. So let's assume right now that I went out, and did just that. Could I do that? Can I do that in this account? I could. I'm going to work it, by the way. I just despise working orders like that. So I'm going to work it at 105, right? So I refuse to just give them money by hitting $1.02. So I'll work it at $1.05. Work it. Right? You can see I've got positions elsewhere. So timeout, that's it. So I'm going to go out and I'm just going to sell the June, 450s. Let's say that I sold them for $1.02. Sold at $1.02. Fans go wild. Okay, now what do? Don't worry about hedging. Hedging is reduction of risk. Don't worry about anything right now. All I want you to worry about is I sold something for $1.02. Let me ask you something. What's the most you can make on this trade? What's the most you can make on it? Come on, people. What's the most I can make? I sell something for $1.02. What's the most I can make? $102 on a one lot. Captain one lot rides again. Can't make more than $102 on that. How long will I have to wait to make my $1.02? Way I look at it, there's only one way to make the full $1.02, and that's to wait 101 days. That's insane. I don't want to do that. I don't want to do that. I don't have to do that. I'm not going to do that. Why am I not going to do that? Because I don't want to do it and I don't have to do it. What I'm going to show you is actually kind of cool. If you look at the 450s right now, I'm going to close up this June. What would the 450s be worth if I just had 73 days left? So what I'm doing is I'm saying if I had the 101 day option and I just fast forwarded, what is that? From the 101 to 73, that's 28 days. If I just fast forwarded 28 days and the market didn't move, assuming all factors being held equal, the market didn't move, how much will I make? Because everyone's told, options way out there, they don't decay very well. Yeah, that was until Ultima. What's Ultima? Ultima has to deal with the volatility. By the way, Ultima is not ultimate. Ultima, is the Vega, and then there's Vama, and then there's Ultima. It's actually a tertiary derivative of what's termed Vega. And do you have to know that? It's going to be on the test layer. You better know that. No, it doesn't matter. People go, it's the ultimate trade. It's not the ultimate trade. It has nothing to do with it. It's called Ultima. Ultima is the volatility. That volatility has provided us an incredible edge. You want to see the edge? The decay 101 days out is phenomenal, but it's not regular decay. It's not what we term theta decay. It's actually some volatility decay. What I'm going to do is this. We just went out, okay, and we sold this little animal right here, the 450s. What is that little animal going to be worth? Okay, with exactly, well, 28 days from now. Let's go right to the 450s. Survey says 44 cents. Okay. So 28 days from now, I could turn around. 28 days from now, I could turn around and I could buy back the 16th of June 450 call, and I could pay, oh, we'll call it 44 cents in here. Market's 43, 45, 44 cents. Okay. How much do I make? Anywhere from 50, okay, to 60% in 28 days. Can your strategy do that? What did I do, by the way, to actually make the 50 to 60%? Oh, I know, nothing. Everybody doing something, I'm doing nothing, okay? It's the show about nothing. You just have to learn how to execute upon this properly. Now, everybody looks at it for the first time, they go, wait, what did he just do? Okay, all I did was sell something that at 101 days, okay, I waited basically a month. I was able to buy it back for 50 to 60% gain. Look, I sold it for 102. I bought it back for 44 cents. Way I look at it is I made basically close to 60%. You should be making between 50 to 60%. Okay. Do we like it so far? Did I have to hold the position? Did I have to hold the position for 101 days? Of course not. I held the position less than 1 month. Are you opposed to holding the position for a month? Well, as we said to begin with here, we're here to learn to make money every month. I don't care where it comes from. You know, a lot of people are like, wait, but maybe I should sell stuff that has like 7 days left. The problem is if you sell stuff with 7 days left, look, you're going to be selling like a 409 to collect $1. And you're going to sweat so hard for the next, like, if you look at this, the market's basically trading at $3.99. You don't think it can move $10? It's moved $6 where? Today. In the last 3 hours. In the last 3 hours, the market's moved $6. You think you can't move $10? Me? I'm trading the 450s. I'm in the nosebleed seats. I'm out in the parking lot tailgating with a beer, okay? And you're screwing around with the short duration stuff. You got to get off that boat, okay? That's a death sentence in here. You got to go out further in time. Why? Because the options further out in time, they're slow. Slow is good, okay? What do you care? All you want to be in this business to do, all you want to do in this business is one thing, and that's what, okay? Make money. By the way, somebody already came in and asked about margin. What did I say about margin? What did I say about margin? Okay, let it go. You can circumnavigate all the margin. It's easy, right? I'll show you how to circumnavigate margin in a moment. But the thing that and by the way, you can do this in an IRA. By the way, yes, you can sell naked calls in an IRA. People don't even know that. You can sell naked calls in an IRA. You go, really? Look, that's a naked call. It's in an IRA and it's a 2-lot. Okay, so you can do anything you want these days. Biggest thing, all you want to take away right now, I can make between 50 and 60% in less than a month, okay, without really substantiating much risk. And that's critical. And you go, well, can you do it in another product? Sure. I mean, I can go into the QQQ. I could do this all day long, right? If I went into the Qs and I opened up something like 101 days out, I'll do the 101 day again because it's a nice, very clean example, okay? And we'll come out here and try to find a nice, round number here, like the 345. See these 345s? They're trading for about $1.35, right? Okay, we can even get crazy. We can go all the way out to the 350s. Let's do the 350s because you know why I'm doing the 350s? They're trading. Look, I could sell the 350s also in June. They'd be trading for around $1. I only picked them because they're around $1. What would those be worth exactly 28 days from now? Well, open up the 73-day options, look at the 350s. Okay, survey says 45 cents. I'd buy them back for 45 cents, filled. As I said, you'll always make between 50 and 60%, okay? This is of critical importance, always between 50 and 60%. Again, we can go on and on and on and on, but you have to learn, okay? Why we went out so far? Because what we've learned about decay is not accurate, all right? What we've learned about option and option decay is a huge fallacy, because this is what we term, okay, whoops, this is what we term near money decay. You're not dealing with a near money option. You're dealing with a way out of the money, and extremely far. O stands for out of the money. We're going for like an extremely far out of the money option. And what happens on a really far out of the money option, okay, the volatility itself has a decay rate along with theta, crushes the option's will to live. And I'll tell you what, it is wildly, wildly profitable. So everybody that's looking at this right now, of course, is then going to ask the question, well, how can you do this with very limited margin? How many people have that question? Anybody? Okay. So seriously, because a couple of people already brought it up. Here's a $5,000 account. That is a $5,000 account. My option buying into power in there is $5,000. Here I am on TastyTrade. On TastyTrade, I'm going to go into a product called the MES. What's the MES? It's the micro S&Ps. It's an option like any other option contract you've ever traded. Anyway, let me open up this next series in here. Let's go exactly 100 days out. Okay. Anyway, in this particular series, could I go out, right, and generate a very similar trade? The answer is, of course. Here we are at the 4,500s. Okay. I could sell this right now for $10.50. How much margin would that tie up? Okay. How much margin would this trade tie up? It's basically the same trade as the spiders. This would tie up $612. It says it right there. That says BP. That's the buying power, $612. So if I wanted to get, let's get crazy. Let's do more contract size. Okay. Let's do 4 contracts, which is the equivalent of 2 spider contracts. It's going to tie up a whopping $2,000. That's 4 options though. That's big. That's a really big trade. Would only tie up $2,000 of buying power. Okay, it's awesome, isn't it? So, by the way, this product called the MES, they even have daily expirations. Did you know that there's no day trading margin rule on that one? Okay, no day trading margin rule. By the way, these options, if you're curious about the open interest, it's low because the options were just added. They just added these 2 weeks ago, all of them. All of them. This is going to be the hottest product in the entire industry, bar none, for retail traders. Okay. And I got to tell you, we're already trading it, and we're trading it with some size. So it's the up and comer in this business. We've been in this product since it was launched. You can see I've got a position over here just to show you. When people talk about like open interest, when I trade, want to see what other people do? Okay. Look. This is a brand new product. You're like, oh, nobody ever trades it. Can you get good fills? That's me right there. It's 1,000 lot. Why? Because I put a trade on, and everything that we do alerts to other people, right? Now, this is a very small product. It's where you get started. This is like playing in Little League. Now, are we okay? Because the most important thing is I want you to understand right now where we're generating these quick returns. And we're not done, not by a long shot, because everybody's thinking about like, that sounds awesome. But what about the risk? Okay, 90% sounds great, but 10% of the time, the market's just gonna like, like, look, okay, the trade that we just suggested there a moment ago, and we looked at, if I go back to it just real briefly, I want to show you what's called probability out of the money. Okay, well, we talked about the 450s, like there they are right there. There's the 450s. Did you know that the trade that we looked at has a 93, look at that, 93% probability of expiring out of the money? As I told you earlier, though, probability, it ain't everything, because what this comes down to, and I say probability, forget about even price, don't even worry about it. The 93% of the time, whoops, is critical, okay? The 93% of the time is critical. But look, 90% probability in the 10% hammer. So you're right. All of a sudden, smash. And I'm going to tell you exactly what happens to people in a trade like this. Here's what happens to a lot of people. They go out and they do a trade called an iron condor. How many people have ever heard of an iron condor or traded an iron condor? Come on, admitting it's the first step, huh? Have people traded an iron condor? Anybody? Sorry, I'm walking away for a second here to gotta actually raise the air conditioning. Yeah, we have air conditioning on here. It's warm today. It's like 82 degrees here. Okay, it's tough. Yesterday was 81, today was 82. It's wild. If you've traded an iron condor, what an iron condor is, for those of you that do not know, all right, and I want to make a very, very distinct impression upon you with this trade. So for those of you that have no idea what an iron condor is, let's get to, you think it's complicated, but it's not. Basically, here's the market being like 400. You go out and you sell a call, and then you buy a call. Whoops. And then you buy a call, and then you sell a put, and you turn around and buy a put. Look, all we're doing here, we're selling a put, we're selling a call, and we actually buy a hedge. What do we want to have happen? The marketplace stay in the range. And it does. This trade could be as good as 90% of the time. But did you ever ask yourself what happens in this trade if you're wrong? Okay. This is one of the most alluring trades. This is how they get people involved in selling options. I say they. This is for novice educators. They just want to sell a class for $500. You too can learn how to get completely screwed in this trade, because what's going to happen to you in this trade is this. Look, you're selling a way out of the money put and selling a way out of the money call, then buying a call and buying a put to hedge it off. And the trade may work 90% of the time. So you take a class and you pay a couple of $100. And the first trade you do, the very first trade you do a one lot in the SPY, and it works. Yes. And the very next trade you do, okay, month number 2, you do what? Okay, in month number 2, you do a 5 lot in the SPY. You do, when I say 5 lot, you're doing 5 contracts. In month number 3, now you do a 1 lot in the SPX. What's the SPX? The SPX is the mother of all products. It's exactly 10 times the size of the spiders. And you know what? That 1 lot, it works. Yes. On the fourth month, now you're a huge believer. You're like, holy crap, this stuff works, man. Because in month number 1, I made money. In month number 2, I made money. In month number 3, look out, Warren Buffett, here I come. How many people have ever done this before? Okay, look out, Warren. Nobody thought to themselves for a second that you've had 3 profitable months in a row because the trade is a 90% probability. It's like nobody ever thinks that way. So by month number 4, we're going to take month number 4 up here. Now you do a 10 lot in the SPX. You know what a 10 lot in the SPX really is? 10 lot in the SPX is the equivalency of 100 contracts in the spider. So all of a sudden, 1 month you're trading, I'm capped in 1 lot with a cape. By month number 4, you're capped in 100 lot. Okay. And the moment you step in big, in the iron condor, the marketplace is like, we got one. Markets tank, just tank. You go, I couldn't, I didn't, and then wiped out. Not only did you lose what you made on the previous 3 trades, it also took at least 50% of your account. At least 50% of your account. Okay. A big timeout on this one. I'm not saying this because, I know this is what's going to happen. I worked at thinkorswim and TD Ameritrade for 15 years. Who do you think that people would go to when the crap hit the fan? Like, I sat on the risk committee, right? When we were thinkorswim, I've seen this at TD Ameritrade. It was horrific, right? It had billions and billions of dollars in the exact same iron condor, and you'd watch it and be like, oh, here it comes. Here it comes. You could tell in the morning, like, how many people are going to get wiped out, and they did, okay? Look, the buck stops here. This crap doesn't work. It just simply doesn't work, okay? Because there's no edge right now. There was in the past, but there's no edge whatsoever in an iron condor. And then, of course, by the way, I always say, like, market's just evil enough to allow you to make money 3 or 4 times and increase contract size, then train wreck. Your losses exceed your gains for the previous 3 trades. I know it's like I could see your account. Well, I could see your account. We've seen it all before. And then you take another class for another $500 and they say, you can fix anything. You can fix it. And you can put a butterfly and you can do this. And you're like, listen, I'm totally a cynic on the whole idea of fixing a trade. Look, anything you do to fix a trade, the very notion of fixing a trade throws more good capital after bad, right? I really want to know this. Can you fix a trade without racking up more risk and more transaction costs? Can you fix a trade without racking up more risk and more transaction costs? And the answer is absolutely not. It's impossible. Some fixes may work. The very notion of fixing a trade, there is more good capital after bad. You got to throw those trades out like yesterday's trash, right? You got to learn how to do this the right way. And that's exactly what we're going to do. Look, we're not here. We are not here to teach you to sell option premium naked, okay? Anybody could have figured that one out. We're not here to do that. What we're here to teach you to do, okay, is to be an inventory manager. And then, okay, and much more appropriately, what you're really here to understand is now at TheoTrade to cut the learning curve so you don't have to sit there and work at this for a period of time. We just send you trade alerts. We literally fire alerts. When we execute trades, it generates an email. The email is immediately sent to you, or text message, or push notification. We prefer, okay, text message and push notification. Why? Because it's fast. Email is like a snail, okay? So text message, push notification is instantaneous. When I say that we want to create, okay, inventory in the inventory management business, let me give you an example. This, okay, oh, look, I can make it disappear. It's gone, okay? This is a bottle of water, all right? Let's say, for example, and I like to use this because I think it's a great example. I don't care what the item is. This bottle of water, I'm like looking around for something other than a bottle of water. This bottle of water, let's say, is trading for $1. Okay. Now you can buy it or sell it. But every time that you go out and sell one of these, okay, every time you go out and sell one of these, there's a 95% chance that you're going to make 50, okay, 50% on it. How often do you want to do it? I'm serious about this. Ask yourself the question. Every time that you trade this bottle of water, you're going to make 50% on $1. So the bottle of water sells for $1, but your edge in this, your edge in this, okay, is going to ultimately be, all right, 50%, which is a big margin. Is it not? It's a huge margin. So what is the key to being able to make money on this bottle of water? You tell me. What's the key to actually, making money on the bottle of water? I'm going to stop right there until somebody actually gives me the right answer. I will watch and wait until I get the right answer. Okay. A couple people got it. Crap load of water. What you basically want to be is an inventory manager. You want to sell water here, 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 here. All right. You want to sell, okay, a lot of water, a lot of water. You got to get inventory going. People seem to think that trading, like they look at trading all screwed up because you've listened to CNBC for so many years and so forth. And I'm not picking on CNBC. Look, it's like what sells to people. What do you think's going up? What do you think's going up? You think a market making firm sits there and goes, hey, Joe, what do you think's going up today? They don't give a crap. It's all inventory management. All I ever did on the market making side of the business was inventory management. Okay. When I moved over to proprietary trading, okay, we managed about $400 million when we started thinkorswim. It was all inventory management. I don't know anything. I don't know the first thing about like a MACD, a Fibonacci. I do understand MACDs and Fibonacci's, but I don't use any of that. I'm an inventory manager. The way I see it, I got to churn inventory. Not all inventory is going to make money. Once in a while, bottle's going to get crushed. Okay, that's okay. Inventory management. The key is once you realize what you can do with that bottle, okay, that you have an edge in that bottle, you got to churn through as much inventory as humanly possible. So what I am going to do, okay, and in a very appropriate fashion, I'm going to try to make you understand a little bit about inventory management and what that comes down to. Obviously, a moment ago, we talked about selling calls, but we could also, conversely, we could go out there and we could definitely, let's come over here. I need to see Delta. Okay. We could definitely come out here and sell some puts as well. All right. So I can sell some puts. So what we're going to do in this particular example, I'm going to start very fresh over here. Let's say that the SPY, let's say that this is the SPY. and the SPY is trading right at 400. I'm going to come out here and I'm going to sell, okay, the 450 call. And for the 450 call, I'm going to collect $1. And then I'm going to turn around. Maybe we rally a little bit the next couple of days and I sell like a 460 call, collect $1 here. Before I know it, the market's selling off and I'm selling a 330 put. By the way, the puts are trading for twice as much. I'm going to collect $2 there. Eventually market sells off steep and I sell a 320 put, maybe collect another $2 there. Okay. Maybe I even sell, okay, a 340 put, you know, collect another, I don't know, $2 there. And all of a sudden we rally huge and I'm selling like a 470 call, collect $1 there. You guys see where I'm going with this, right? So collecting a little out here, collecting here, 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 here. Okay, that works because what I'm going to be doing, all of these are way out of the money. What I'm going to be doing is trying to grind through as much inventory as possible because as I'm grinding through inventory, 50%, 50%, 50%, they're coming off left and right. Okay. And you know, when you look at this from an account statement point of view, right? I'll show you what's a product that I've traded a lot of, right? So I'll come into the S&P options and futures. I'll just make a quick point. I'll go back, for instance, 360 days in here. And you'll see the entire, there's 111 fills over the last 360 days. Everything in here, open to close, to open to close, to open to close, to open to close. Look, to open to close. Look, I'm closing the 4700s. What do you think the 4700s are in the spiders? The same thing as the 470s. Okay, to open to close, to open to close. Like, look at all these, you know, well, it's 111 trades. By the way, these are all real trades. This is trade history. This is not, you know, those are all real trades. I'm grinding through inventory. Okay, now it's a great way to be in business. And you look at it and go, what about the transaction? Transaction costs are negligible these days. Okay, but there is a cost of doing business. Okay. What eventually, if you just go out there and sell naked and sell naked and sell naked and sell naked, what eventually will happen to you? Okay. What's going to happen to you here? If you're an inventory manager and you just sell naked and sell naked and sell naked, okay, I'm going to tell you exactly what's going to happen to you is that one day, I come back over here, one day that marketplace is not going to be as kind to you. One day the market's going to open, okay, not here, but it's going to open right here. Ba-boom. Okay, you are gonna get destroyed doing this. Destroyed. Okay, sell naked. Okay, big risk, huge risk, unfathomable amounts of risk, because eventually you will wake up. It could be tomorrow, it could be a year from now, it could be 10 years from now. The market will open up, punch you right in. Okay, where it's going to hurt the most. There's no question about it. You know, and people go, well, what's the game plan? Look, if you want to learn to do this and you want to learn to do this properly, we actually use a hedge. Like if you were out there selling bottles of water, okay, and you really wanted to amp up your business in selling bottles of water, what would you have to do? You're going to have to incorporate, you're going to have to get insurance policies, you're going to have to get a couple of employees. I mean, it's just going to go on and on and on. Not asking for any of that, but I am asking you, okay, to understand something. Enter, okay, the hedges. Enter the hedges. There are several hedges that we often use, okay? There's an RTS, which stands for risk twist. It's a risk twist spread. Number 2 is a VIX volatility spread. And number 3 is what we term a gamma iron. These are actually hedges. Think of a hedge as a sacrificial lamb, okay? Listen, any business that you're in, I know that, you know, people say you need money to be able to make money, but you really don't, okay? But what you do need, okay, is going to be at times a hedge. Look, it's the cost of doing business. If you want to be in business, okay, you're going to have, if you will, well, the cost of doing business. What do you mean the cost of doing business? We're going to have some type of structured risk mitigation tactic. I'm going to explain exactly what that's going to be, okay? we're actually going to use in this first example, because I think it's the easiest one to understand, we're going to lay on what's termed a hedge. And we're going to put that hedge right here to begin with. You know what that is? Okay. That's going to be a VIX vol spread. Now, if you've never heard the term VIX vol spread, how many people here know what the VIX is? The VIX is the S&P 500 volatility index. And the way the VIX works, if the market goes down hard, okay, ba-boom, okay, the VIX explodes. Now this hedge, it's not always the best hedge, but it's the easiest one to explain. And that's why I'm explaining it right now. Okay, so when you look at that particular trade, all right, when you look at that trade, again, what I want you to understand, if the market goes down, where's the VIX go? You tell me. Okay, market goes down, the VIX goes boom up. Okay, this little tiny VIX spread, it will cost you something. You don't do it every month. You can actually do it months at a time. That will explode, okay, and cover risk. If you have risk on, let me show you exactly how this is going to work, because this is a relatively easy example then, okay, to make work. So here we have the SPY, and it's trading right at about 400. And you've gone out, okay, and you sell, for instance, 330 put and collect $2, and okay, you sell, for instance, 320 put and collect another $2. Before you know it, you're selling, I don't know, the 300 put, collecting $2 because the market tanked. You're simultaneously selling, for instance, whoops, okay, up here you're selling the 450 call, collect $1, okay, you're selling the 460 call, collect $1, maybe you sold, okay, the 440 calls, collect another $1. All I want you to see is you've got your inventory on. The inventory is the reason that you're in this business. So why the VIX vol spread? Because look, you're 70 points out of the money on the put side, but the put side is the dangerous. What if you wake up one day and the marketplace is an absolute, I'll say this as nicely as possible, a proverbial crap storm. The market comes screaming down all the way, for instance, to 3K50. Let's say the marketplace literally goes from 400, okay, and drops in one day to 350. It's a 50-point move, okay? By the way, that's absolutely catastrophic move in today's terms. We move all the way to 350. Do you know what this VIX spread's going to do? Okay, what's this VIX spread's going to do? Boom, it's going to explode in value. And what it's going to do is actually going to provide you an umbrella. Okay, little umbrella, it's open. At that point, you can make a decision. You could either bail out of these positions, you could put more positions on. The one thing is you have a risk reduction tactic. All right, look, without the VIX volatility spread, you're dead. You're going to panic, you're going to freak out. And people always say, well, when do you put that trade on? Oh, I have an answer for that. You always have that trade on. You look at my account, look, okay, you look at my account, there'll always be VIX spreads on. Where is it? It's right there. Okay, there's a 6 lot of VIX spreads. I know it's hard to see with all the crap I have on my screen. Okay, it's a 6 lot of VIX spreads. You want to know why I have a 6 lot of VIX spreads? Because I got some stuff sold right now, some heavy stuff sold. A 6 lot of VIX spreads can actually explode, okay, between $6,000 and $10,000, okay, in terms of P&L. And you go, well, what about the upside? Well, the upside, we actually use a hedge, okay, called a gamma iron. If we actually explode higher, you have to pass through that spread, okay, provides an umbrella to the upside. People, that's inventory management. It's inventory management. People think it's kind of complicated. Really? It's not that complicated. We sent you a text message that told you exactly what trade to put on. And when I put it on, okay, be fairly easy to be able to execute upon that. I'm going to do just that. By the way, there's no pattern day trader rule in any of the products we talk about. Somebody was asking about that, right? There is no pattern day trader rule here. Why? Because there isn't one, because a lot of these are options on futures contracts. There's no PDT rule in there at all. People, I'm telling you right now, you need to learn to do this. This is why you want to learn to sell premium. You can do this in a small account. There's no pattern day trader rule. accounts under $5,000. You could have as little as $2,000 in an account, produces positive theta, may enhance existing positions, provides a high probability of success. You never need to buy or sell the stock. By the way, you could be purely wrong on market direction and still produce profitable trades. And I always put this in there, like, you need this in your life. Look, whatever you might think about the market, here's the one reality. Inflation, it's not going away. The interest rates, okay, they're not going to back down anytime soon. They have to just keep, on the course. We're going to be in a very volatile situation for an extended period of time. You have got to learn how to do something appropriate for these markets. And selling premium can potentially bring in consistent returns while minimizing your risk. Now, in a moment, okay, I'm going to turn into how do we do this the right way and talk a little bit about criteria. Criteria is the nuts and bolts behind this, right? But before we do that, okay, let's show you a couple of live trading examples. Look, variations of all of the following trades. Everything I'm about to show you can be done now with as little as $2,000 in a funded brokerage account, and it can be done inside of retirement accounts. I want to be very clear about a retirement account. In a retirement account, you have to have up to 5,000. Okay, I shouldn't say up to, minimum. Okay, minimum is 5,000 in a retirement account. I want you to understand unequivocally, can you do this trade in a retirement account? Yes. Can you do every instance of exactly the trade that I showed you a moment ago in a retirement account? Unequivocally, the answer is yes. Okay, right here at Tasty Trade, I have just that. This is a retirement account. Now, granted, there's $100,000 in that retirement account. Nevertheless, if you take a look, I've got 2 calls sold over here. I've got a put sold here. That's actually a big ES contract. That's tying up about $6,000 in margin. Why so much margin? Because it's a full futures contract. That's 5 times the size of the spiders. That's a big boy. It only ties up $6,000 in margin. Big boy contract, right? That ain't no joke. That's half the size of the SPX. And I want you to see, can you do this inside of an account? Of course you can. Like, that's the most critical thing, is that you think that you can't do this in your account. You can. You're not going to be restricted in any way, shape, or form. You can do it in a retirement account. You can do it in a regular taxable account with as little as $2,000 in here. Now, what I'm showing you, okay, and I'm just gonna throw like Tesla and stuff at you, but look, what I'm showing you right now is going to be 18 months, okay, of brokerage statement. 18 months. These are trade alerts. Now, when I say trade alerts, I want to be crystal clear. These aren't trades that were just placed. These are trades that are placed, okay, and texted, okay, and or pushed out through push notification. This Tesla trade, I just use it as the initial example, okay? When I say this Tesla trade, just to show you what this is the opening day of the trade, the closing day of the trade. This is the return for the trade. To open, to close. Tesla, the strike, call, okay? Opening price, closing price, right? So you can see everything. And if you ask, where does this come from? That, people, is a screenshot. Like, this is a screenshot directly from thinkorswim. It's this, okay? This I figured was a little hard to read, okay? This basically is the last year. This is exactly 360 days back. As I said, everything we do here, we have a very much no holds barred approach. Like, you get to see everything we do, okay? Everything, every hedge. Like, look, there's hedges. People go, did you have to ever use a hedge last year? Like, what happened to you last year? Yeah, right there. I can see it. There's a hedge I took off for a $77 credit. It's a $100 wide hedge. I made 77 bucks. That got real, man. That got real and real quick. But because the volatility was so high, sold premium huge credits. Look at this. $40 credit, $45 credit. It's gold, Jerry, it's gold. I'm now going to take you through individual trades. So you can see, not only can you see 18 months of results, then I want you to be able to see, okay, this, okay, is, all right, TheoTrade. And you get to actually see the Ultima TheoTheo portfolio. This is every trade, to open, to close, to close, to close, to close, all the opened and closed positions. These are trades, all right, I see, like, get text alert notice. These are trades, okay, that are both opening and closing. This is the portfolio, okay, for the strategy that I'm showing you. All I'm going to show you is, look, to open to close, 57% return. These are, again, trade alerts. another bond. People go, I don't even know what the bonds are. By the way, absolutely can do this in a Roth. Okay. You absolutely can do this in a Roth. Doesn't matter. Okay. But I will tell you, certain brokerage firms have some restrictions. One of the things that we do suggest, Tasty Trade definitely allows it. Okay. Thinkorswim, which is now Charles Schwab, will allow, but you have to have a little bit more capital at Thinkorswim. So it just depends on the brokerage firm. Wow, SPOOs are down 60 now. Okay. This is becoming a good day for Don. It's a good day for Don. But I stressed you, look, bonds, you don't know what they are. This is what we do is we give you a little bit of education, okay? But then we start sending you trade alerts to get you ramped up. The fastest way to get ramped up is to go head on into it, right? And you don't have to have a huge amount of understanding. Look, we're gonna help you, walk you through it. I'm just gonna run you through 62% return, 53% return, 76% return, 60% return, 50% return. Okay, look, we're only into like what? I know we're only into February of 21, but I'll scroll a little faster so you guys get the idea. Now, I'm just scrolling through a number of trades. You can see the average return is right around 50%. There's a loss, okay? It happens. But as I actually scroll through, you'll see some of the consistency. IWM, SPY, IWM, bond, IWM, IWM, bond. Now, as people get a little bit more comfortable with the strategy, okay, as they get more comfortable, we start to scale them into bigger portfolios. So we actually have a portfolio that specifically trades. Look, that's the ES. What is the ES? It's a much bigger contract size. Okay, so we got people a little bit comfortable. We scale them into a bigger portfolio using the ES. After you understand a little bit more about that, you can even follow us into trades, okay, called things like Christmas tree spreads. This is Christmas tree spread. It's done on the spiders, okay? It's done for a $21 credit, closed for a $3 debit. That is a home run, okay? In terms of dollars and cents, this is thousands of dollars of P&L, all right? QTLT, ES, we're still in 21, right? And this is every single trade in the portfolio. I didn't select anything in here. This is a Christmas tree spread open for $22, okay? Closed basically for a small credit, a 92% return, okay? As I'm kind of cruising through here, right? Now we're into 2020. By the way, this is in, okay, 22. Another Christmas tree spread, almost $4,000 profit for every 1 unit done. Continuing to kind of scroll through here a little bit, getting real at this point, right? Another Christmas tree spread, $1,000 profitability in here, okay? All right, so we're up to about 18 months. There it is. It's about 18 months of results. And you go, well, what happened after 18 months? I'll tell you exactly what happened. I got really sick of putting together slides. There's like 100 and something slides in there. So what you get to do thereafter, okay, is you can come in here and actually look at the Ultima TheoTheta portfolio. I'm just showing you right now, this is the portfolio, right? Open positions and closed positions. By the way, don't let it expired is not a bad thing. That's one of my hedges. One of my hedges expired. Everything is in here. These are the opening positions, all the closing positions. And we actually have, when I say everything, okay, you can go back on every single trade, okay, that we've done in these portfolios. Look, I'm all the way back into 2021. We're not going to overwhelm you with trades, right? Everything has an opening position and a closing position. You go, oh, the last time you opened a position, Don, was February 22nd. It's already, what, March 7th? Yeah, well, that's because I was closing stuff profitably here, what, just the other day. So last week we were closing a crap load of stuff profitably. You don't have to have a lot of profitable trades to have a really profitable year, okay? You just have to be consistent. And I don't want to get you guys into too many trades. You'd have to have a lot of capital to effectively do that. The account that you're looking at right here, we'll talk about size in just a moment. But I want you to understand, again, every nuance, okay, you can see. And if you don't have a lot of time, look, every trade that we've shown here today is displayed live at TheoTrade. The trade results are, it's not just perfect for part-timers, this is by design. Like this is not sit in front of a screen all day. Selling premiums totally hands off. You can even use set it and forget it order types. You can use good till canceled, okay? We provide real-time alerts. So what is a real-time alert, okay? When I say it's a real-time alert, almost all of us now have some type of a mobile device. So in this particular case, when I say that all of us have a mobile device, okay, that is the TheoTrade application. Okay, what do we do in the TheoTrade application? Well, we have all the alerts. Okay, you can even pull them all up in here too. So you can see every message that we've sent out recently. All right. So what I'm actually in right now, I apologize because it gets a little weird sometimes to show this. What you're in as it disappears is where I can actually send out alerts, push notification. Push notification can get to you anywhere in the world. If you have the capability, we can also send out text alerts, right? But it's all real-time trade alerts. What better time? Okay, maybe you have no time to learn a new skill set. Look, it's rough out there right now in this marketplace, right? If you have no time to learn a new skill set, okay, feel free to follow the real-time trading alerts. You know, selling premium, it's a wonderful hedge though for recessionary times. It's a wonderful hedge for volatile markets. Okay, but markets, they could be in like bouts of volatility like this for years. I don't say that to scare people, quite literally. You know, one of the things I'll show you guys, it's changed a lot just in the last like couple of hours here. Have you guys looked at this? The Fed Fund futures, okay? This is the talk of the town right now. If you haven't seen this, there's now a 67% chance of a 50 basis point hike as of when? Well, this morning, this was actually 70-30 the other way. This over here was 70%. This was 30%. Now it's completely reversed. Okay, what do you think's about to happen? Okay, they're going to raise rates. They're going to raise rates. There's no question about it. Like, you need to do something other than try to figure out what's the next stock, okay, that's going to go up, right? What's the next stock? By the way, somebody said, does Tasty have a mobile app? Yeah, it's actually awesome. Tasty's mobile app is awesome, okay? Markets are about volatility for years to come. It's fine. Look what our traders are saying, okay? Wow, I want to say thank you again for all you've taught me in the last 2.5 years. I bought into what you're talking about with risk twist spreads and duration positions. Okay, started to trade options almost a year ago, missed out on the last market move up. Currently, my IRA is up 14%. The reason I'm bringing this up, this is exactly a year ago that one came to me. All right, these people are actually making money in what has been a very rough market. Look, the characteristics, you never have to buy or sell the stock. Risk can be tailored to your comfort level. That's what those hedges are about. You never use a stop order. You can vary time frames, minimize your risk. Probability of profitability is high. It's the perfect strategy to enhance one stock's portfolio, but it's an excellent tool to build returns. I mean, that's what everybody's trying to do. And new products allow for the sale of options in nearly any account size. And I've harped on that so much because, you know, people constantly like, I can't do this. I have, you know, X amount. I built a $5,000 account, and I'm going to tell you why in just a second. Okay, look, building a portfolio of options. The options portion of this, if that intimidates you, don't let it. Let me show you exactly why. When I say don't let that portion of it intimidate you, this is TheoTrade. This is TheoTrade, right? And in TheoTrade, okay, we actually have a little start here menu. Let's see if I can actually open that up, right? So when I say a start here menu, what does a start here menu amount to, right? It's where you learn options 101, options 201. You're never going to have to worry about, like, people get so freaked out. Like, look, maybe you don't understand it. Watch some of the 101, 201. Meanwhile, wait a second, you're getting the alerts. Okay, just take the alerts. But you still want to have some basic knowledge of this. Selling premium can initially be done for minimal credits and minimal risk. Okay, you can sell Ultima Premium, minimize risk. Don't let the options again intimidate you. Look, you know, when it comes to trading options, options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. Okay, but you have to learn to utilize them correctly. We can show you how to do this in a matter of hours. But more importantly, now we're producing all of these real-time alerts. We've dramatically changed what we've done here at TheoTrade, okay? Over the previous, we launched this business in 2016, and we did it because, to be quite frank, after leaving TD Ameritrade, I'd sit there and just yell at my computer screen anyway. I sit here and talk to the computer screen all freaking day. My wife thinks it's absolutely hysterical, okay? And she actually asked me the question, by the way, I left TD Ameritrade, okay? I'm about to be 47, okay? I left TD Ameritrade almost to the day in 2015. I left them in February, okay, of 2015. We built this company in 2016. For the last 7 years, like she always just said, like, put a microphone in front of your face. She goes, people would want to hear the crap that you have to say, you know, in there. And then I left, Jeff Bierman left, Brandon Chapman left, Blake left. It just goes on and on. We picked up Corey Rosenblum, Tony Rago, all traders that I've known for years. Like everybody I go back with here at TheoTrade, we go back about 15 years. Some of these guys, 20 years that we've worked together, right? One of the things you got to understand, all right, we do this because we enjoy it. We had to actually shape the business around what the market's doing. And the learning curve, I don't want you to think the learning curve is steep. Alerts make the learning curve cut immediately. All of a sudden, boom, tomorrow you're getting an alert. In fact, one of the reasons I'm looking at the marketplace right now, okay, I'm real close to actually sending out some trades right now, really close. I'm going to tell you exactly why, okay, because we're almost hitting the lower edge of this expected move in the SPX. All right, we're really close right now to actually firing on some trades. So it's almost time. More importantly, again, that's why we're doing real-time alerts. We got to cut that learning curve in the midst of volatility. Look, this is what you need to successfully sell premium for a living. You have to know the underlying stock indices that make the best ultimate premium selling candidates. That's work, okay? We'll cut that work for you. You have to know what volatility should I seek out. Too much volatility, you're dead. Too little volatility, you're dead. Got to actually have the sweet spot of volatility. What options expiration do I select? Is it 101 days out? Like if you guys look at the option chains these days, like look, this is the SPX, the mother of all products. Have you looked at an option chain in the SPX? You could scroll through this thing for like a half an hour, right? Like it's crazy. Look how many options there are in here. I have the 100 days, the 101 days, the 115s, the 135s, the 136 set hike. Like which ones do I actually sell? There's an AM and a PM settlement. You have to love this, okay? We actually dial it in. That's why we send the alerts. What should be the delta of the option I sell? What should be the options I buy against the position? Meaning like, which options do I sell? Like, what is the delta? What's the probability? Then you have to learn how much of a hedge. How do I build the position? You know what building the position means? How many options can you sell out of the money versus how many hedges do I need? You saw me have 6 VIX spreads on earlier. Why 6? Okay, why not 11? That's got to be a perfect ratio. Do I need a large amount of capital in my account to do this? Of course not. What's the right amount of risk? We can dial that in. What are the percentage returns supposed to be? I'll tell you right now, it's 50% and 50% and 50%. The hedge is going to eat just a little bit, okay? But the hedge is the cost of doing business. You know, if you're going to go out there and you're going to be involved in premium selling, you got to have some risk reduction methodology or you're dead. How do I protect myself from market crashes, okay, when selling options? Well, obviously, that's what the hedges are for. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Recipe basically means checklist, okay? Checklist that would be the exact same thing as like a pilot getting into a cockpit and actually going through a pre-flight checklist. But then once you're in flight, you got to be like, look, most of the time when a pilot is sitting in an aircraft in the air, what do? Nothing. They're playing crossword puzzles like on their iPad. Okay, once in a blue moon though, whoa, we got something going on over here, right? And there's criteria for that, literally a flow chart of exactly what you do. We do the same thing. What if the market goes up? What if the market goes down? What if the market completely tanks and falls apart? There's a dividend coming, option expiration is coming, oh my! We push all that aside. Why? Because now we have real-time alerts. Real-time alerts as opportunities arise, right? Look, trading's all about answering what ifs. What's a good stock or ETF candidate? The correct options expiration cycle. How much capital do I commit? What the strike price options do I sell? Which options do I buy? Can I limit my risk? We have those answers and we have trade alerts. We build recipes with definitive criteria. As I said, they're checklists, just like a pre-flight checklist. They are checklists for each strategy and each unique variable you're going to encounter. And now we're taking TheoTrade to a completely new step, a step beyond. Welcome to Ultima Alerts. Okay, TheoTrade is the answer to your questions. We'll give you the right probability. We give you the exact number of option contracts. We'll give you when to close the premium sell. What if you sell off big? Do I bail out of the trade? What if we rally massively? Do I fix a losing position? It's about how, when, why, at what price. And I'm telling you right now, it's just the beginning of the variables that you're going to face while selling Ultima options for a living. Look, you can Google, okay, and read what selling Ultima, okay, premium is. You can Google 10,000 pages will come up about selling options premium. Legitimately, 10,000 pages if you Google. You can even ask Chat GPT, what about selling options premium, okay? And it'll give you a nice canned response. Maybe you even know how to build a few trades. But I'm going to tell you right now, you need TheoTrade's alerts. 20 plus years trading experience. That's just me. I had access to client order flow for over 15 years. I viewed and studied millions of trading accounts. Look, we know what works and what doesn't. I ran education for 15 years at a firm with the largest order flow in the industry. Okay. Ultima Trade Alerts is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning this trade setup. Okay. I'm going to tell you again, as I started this presentation, there is a reason that we've been talking about Ultima since 2020. You want the reason? Because it works, okay? We spent years working on this, fine-tuning it, all the criteria, and now, okay, real-time trade alerts on the convenience of your mobile device. We set up Ultima income generator alerts, okay? The portfolios that you will gain immediate access to are TheoTheta Small and the TheoTheta, okay? We have one portfolio that is designed for $5,000 accounts, another one that's designed for $50,000. That's the minimum. You can even have a $2,000 account and pull this one off. I put in $5,000 to encompass, of course, IRAs, right? Look, okay, text and push notification, trade alerts for 12 months, right? You go to theotrade.com/UA, it's $1,000, okay, for 12 months. Now, before we go any further, okay, what we are offering here is in addition to everything else that we have at TheoTrade, okay? We really feel at this point, though, in the game, we don't want people in the midst of volatility. And I want to be very, very clear about this. When I talk about the midst of volatility, it's a perfect day. We don't want you to be stuck in a learning curve in the midst of volatility, okay? There is real money to be made right now. You can see it. There is real capital to be made right now. You got to immediately, you got to hop in, execute, 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 okay? We actually built text and push notifications, okay, to guide you. Do I want you to go through and watch the class on Ultima? Definitely, okay? I'll talk all about it here in just a second. And by the way, I'm going to just throw this out here for your consumption, okay? You look at it, you go, $1,000 is a lot. There's a money back guarantee on it for the next 90 days. I'll talk about it in a second, okay? But push that aside for just a moment. The thing that is critically important is for the first time, we've actually set this up. So these trade alerts can be coming to you literally later today, and you can execute upon, okay, real trade ideas immediately, right? It's not about, oh, I need to get my $1,000 back. It's about cutting the learning curve. It's about getting you immediately involved in trades. Okay. And of course, everybody wants to see some of the returns. I'm going to throw that at you. I don't care. I'm going to throw you exactly what 2022 happened to be. Okay. So it's text and push notification, right? Trade alerts for the next 12 months. And then of course, everybody says, what happens after 12 months? If you want to do it again, do it again. Okay. That's up to you. We don't do membership anymore. We don't do that, right? You want to be in TheoTrade, you pay $1,000 now for the year. Okay. Which is an absolutely smoking deal. Now the TheoTheta Small, okay, would be an account with $5,000. The TheoTheta Large, I recommend initially you have $50,000. But somebody's going to say inevitably in here, and I want to address this. What happens if you have $20,000? Okay, you just basically do 4 times what I'm doing in this account. That's it. All you have to do is put it to scale. It is very straightforward. Now, I'll explain more about what you get in TheoTrade in just a second. But Ultima Income Generator Alerts. It's a new positive theta portfolio, no hold barred trading approach. You can see everything, full disclosure on all trades, opening, closing, hedging. You get to watch me obviously trade and discuss positions. We even do videos to update you on here. And we are giving you access to TheoTheta Small portfolio. TheoTrade will also do a complete, okay, riskless trade. This right here, this is your incentive to enroll today. Why do I say that? We offer a 90-day money-back guarantee for those of you that are enrolled today. The money-back guarantee. If you're not satisfied in the next 90 days in any way, shape, or form, okay, email support@theotrade.com, okay, receive a full refund. That's it. Look, it's $1,000, okay? It's not a lot of money for us. It's not a lot of money for you. We have 6,000 individuals on here. It's $997. We even break up the payments and so forth. But I want you to understand about the money back guarantee. You don't have to call us. You don't have to do a little dance, make a little love, get down tonight. We don't need, just email us. Okay. No excuses, no questions, no stipulations. There's no stipulations. Some people literally have actually emailed us and said, I never even got a chance to trade. Can I get my money back? And we're like, cool. Like, I get it. I get it. Like, life gets in the way. There's no excuses, no questions, no commentary needed. One of the things that's so important to us, like, look, we want people here that want to be here. We want people, that want to learn this business. And I don't mind showing you, as I did earlier, if you look at some of the trades that we put on, you're kind of curious, like, well, do people really do these trades? This is the small portfolio, This has 1,000 contracts open. You go, that's not that many people. That's because it's a small portfolio. The big portfolio, we do like 10, 15,000 contracts when we execute into the big portfolio. That's just a little guy, right? We're doing 1,000 lot in there. So I want you to see, like, when you actually hop into these trades, you are not alone. You are not alone. Look, Ultima Alert. This is the opening trades, The 2022 Ultima portfolio returns, It's on a $50,000 account. Now, time out. I never used the full $50,000. I never even got close to that. I used no more than 1/3 of my margin at any point last year. So on a $50,000 account, I never went above $17,000 in margin, ever. I'm going to make that clear again. I never went above $17,000 in margin. I returned 56.6%. The exact number is $28,314.75. Because everybody asks me that question, right? So it's right there. The TheoTheta portfolio, the small one, we started a little bit later in the year, Similar returns, but we started it a little bit later in the year, right? We also do weekly updates for these portfolios, meaning that in a 12-minute video, I update everything. I always do this on a Friday morning, and you get to see basically, when I say on a Friday morning, Friday, the market opens, yada, yada, yada. I record a 12-minute video. It gives you all the updates and all the moves that I made so that you don't have to sit there all day long, and understand this. Now, TheoTrade also has a live trading room. When I say a live trading room, right? Look at this. It's a live trading room, Right now, there are literally hundreds and hundreds of people in here. If anything's actually highlighted, this is because they're traders in real time. Tony Rago, he's one of us, right? This is obviously Tony's hour. Corey Rosenblum is one of the moderators in here, also one of the instructors. He's one of us. So you get to see all of our trades throughout the course of the day, We have everything from member chat rooms to shared, studies. Everything is archived, We have just hundreds of different classes available to you in the archives. If I come over to the class archive, right, and come in here, and again, I know that some people are not necessarily like here to watch a bunch of classes, but I am going to tell you, you have access to every class that we've done, everything that we've done. We still give you access to all this. Catapult trading, flyby, Z spreads, inflection point, Ultima, Ultima, income, and inflection point, along with catapult, these are all the same genre of trade. This is actually a genre of trade that I call Ultima, right? All of that you have access to and access to immediately. This is what the text messages look like, And the first time you see it, let's talk about this one right here. TheoTrade strategy, Don K, Ultima Trade, TheoTheta small portfolio. This is a buy to close for 50% profit. Cool, done, right? What else does it look like? February 1st, right? Buying back for 50% profit, buy to close, 50% profit. Right? This one is literally yesterday. That's why I took this one. There's a part 1 and a part 2. Part 1, buy back the puts for a 50% gain. Apparently, I missed a G in there. By part number 2, though, this was actually bail the hedge. So part number 1 was close for a profit. Part number 2 was get out of your hedge. Why? We don't need a hedge. There was nothing left to hedge. We made money. And that's what we do here. Look, what our members are saying. January 11th. Thank you for the reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one to which I see a pathway to retirement. Comes from Pat. Okay. John, it's from a year ago. My closed year-to-date profit in Ultima Trades is paid for my yearly TheoTrade subscription. Okay. This comes from Jeffrey. I want to thank you for all the staff with all viewpoints. This year, I did more of what works and less of what didn't. Okay. Thanks to your selling premium and IPS hedges, that's inflection point. I took 12,000 to over 32,000 in 18 months. Okay. I've been doing your method. Thanks again. By the way, inflection point spreads is Ultima. Okay. Get into TheoTrade now. We're going to work with you directly. There are 20 spots today. As I said, there's an incentive today. There are 20 spots, okay, on the TheoTrade riskless trade deal. It's a matter of size. Okay, we trade live. Look, right now, if you guys cruise over to this particular site, I'm going to walk you through it really quick. It's theotrade.com/UA. Theotrade.com/UA. And I'm going to take you to it right now. It's 1 year of an Ultima, okay, income generator alerts. So UA stands for Ultima Alerts. That's U as an uncle, A as an apple. Theotrade.com/UA. Okay. Those that are actually enrolling for this, all right, you will receive not only confirmation, but you will have, okay, 90 days completely riskless. There are 20 riskless spots in here. The reason I wanted to bring you to this particular site, right, is as it populates here, wow, there's a lot of people going to it right now. So sorry that was so slow in opening. You can actually select a single payment of $1,000. You can break it into 2 payments. Okay, you can even break it into 4 payments in here. Apologize for that. But look, this is not about like $1,000 for jumping into this. The reason we're now putting together like a year of alerts, it's going to take you some time to get acquainted, okay, with the execution and get you up and building a bit of an inventory. And to do that, okay, we really suggest, okay, you got to give us at least 3 months to be able to get that inventory up and going. All right. Thereafter, you make up your mind. And again, it's one of the reasons we give you a money back guarantee in here. So go to theotrade.com/, okay, U as an uncle, A as an apple, theotrade.com/UA. You can enroll now for it. As you're doing that, and again, the $9.97 riskless offer has never been available before with Ultima income generator alerts. And again, there's just no stipulations on that. You're also going to see text messages coming, okay, from these numbers. If you're a Canadian, you're concerned about it, it's okay. We actually bought, a Canadian number, right, in there. So again, it's theotrade.com/UA. So saying what our members are saying, okay, I just wanted to jump to this one. We are here to support you in every way, shape, or form. If you email us, we'll get back to you, okay? And it's one of the reasons I threw this in here, okay? I recently re-upped with TheoTrade because your Ultimate Income Generator program, right? I just wanted to cut to the chase over here, right? I just wanted you to know about a special experience I had with Brian Aponte this past Friday. Getting started with your training videos and ran into a technical issue at 3:45. Sent an email to the support group, time of 4 o'clock. I thought I'd have to wait till Monday morning. At 4:10, the phone rang. It was Brian Aponte. Okay, look, we are here to support you in every way, shape, or form. Now I'm going to answer a couple of questions for you guys, some general questions, but I'm more than happy to answer some specific questions for you as well. For those of you that are enrolling, okay, as you are enrolling again, all right, the first 20 people to enroll, and that's where I say it's a bit of an incentive. And we do that. Why? To incentivize you to enroll today. As you are enrolling here, okay, I will answer some of the general questions. I will also probably read off like your first name, if that's okay with everybody. Feel free to select whichever plan you're comfortable with. Those of you, if you're looking for the link, okay, if you are looking for the link to the expected move, it is on the page, the very bottom of it. It's theotrade.com/UA, right? When you go to this page, those of you, okay, click add to cart, it's just $9.97 for the entire year. That, okay, will entitle you to have trade alerts, right, on several different portfolios, okay? There's even several other portfolios that we're not mentioning on today, but look, what you want to do right now is you want to use these Ultima alerts, whether it's the TheoTheo small portfolio or the large portfolio is completely up to you and the account size, okay? anyone here with $2,000 in your account can execute upon, okay, these trade ideas. $5,000 account in an IRA, right? The account size of $5,000 is really contingent upon having a retirement account. That's not our requirement. That happens to be a retirement account requirement in here. So by all means, right? By the way, somebody was asking what catapult is. I'll get to that in just a moment. So people always ask us some generalized questions. Let's come down to it in here. And the general questions, look, what do you really need to get started? Right now, we have everything you're going to need to get started. Like, you know, do you need a mobile device? You can't even see it, but do you need a mobile device? Yeah, you can use a mobile device, right? You don't necessarily have to have a mobile device, but I think it makes it a lot easier to receive alerts. Okay, you can even trade these days right off your mobile device. There's no reason, like, you don't have to have like a spectacular computer. Look, you're selling premium, and you're selling premium 100 days out. Like, why do you have to have, like, nothing has to be like really time sensitive? You know, if you think to yourself, I can barely even trade during market hours, it's okay. Like, you don't have to have a lot. We have everything you're going to need to get started. All right. Number two, this is not a membership. We're not going to auto renew or bill you again. So after the end of a year, okay, we literally will email you and say, what do you want to do? Right. And you have to tell us what you want to be able to do. All right. Number three, we're providing weekly update videos so you can see all the moves that we make, right? Everything. Like when I say all the moves that we make, why did I actually sell premium here? Why didn't I sell premium there? All right. Great. So you can see everything that I've done. And I'll tell you what, as I said to you a moment ago, like nothing is really like incredibly time sensitive. Like today, if I'm going to sell some premium, I'm going to tell you right now, what do we have? Like an hour to go to the close. Okay. We're going to sell some premium. And it's going to be done here in the last hour. In big volatile days, it's a good time. Okay. I guarantee almost everybody here at TheoTrade, they're waiting for me. Okay. They are waiting for me to sell some premium, and premium I shall sell. Okay. I'm getting all warmed up over here. So we provide you weekly update videos, but again, don't feel like you have to sit in front of the computer all day long. Number four, we're going to provide you access to TheoTrade Mobile. Okay. Our mobile application gives you access to push notifications. Add your cell phone number when enrolling. I want to make this very clear because people get a little confused on this. Okay. When you're enrolling, name, last name, email address, put your phone number in here. If you put your phone number in there, it will automatically enroll you for those text alerts. Obviously, you select whatever payment, you know, works for you. Like literally, it's almost the same thing. You select, you know, the different payments and so forth. But again, all payment types, whether it's a year, whether it's 2 payments, whether it's, you know, 4 payments, all of those, okay, are capable of receiving the 90-day money back guarantee. So you can email us anytime, receive a response within 24 hours, including trade related questions. If you need to get a hold of us, email us, it's fine. Okay, that's part of what we do here, especially trade related questions, right? Variations of all the trades are available inside of an IRA retirement account. Another thing that's critical to us is that you know that anything that you want to be able to do in terms of trades, okay, we make sure that you can do it in an IRA. I'm really IRA centric. In fact, if you take a look at my my Tasty account, okay, one of the primary accounts that I trade in, and it will literally say, so you guys can see this, okay, that's a SEP. It's a SEP IRA, because people always ask me that, like, you sure you could do this in an IRA? That's a SEP. Okay, can't make that up. About to execute a trade. Look, I got a SEP IRA. Okay, I have a portfolio margin. I have an individual account. You can see exactly my buying power in each one of the accounts. As I said, everything is completely no holds barred approach, right? We at TheoTrade can help you get approved for options, right, at a number of major broker dealers. Obviously, we have some very specific. Remember, there are 20 riskless spots available. Get results, take action, enroll for TheoTrade now. There's no risk, okay, to you. All right. Again, it's theotrade.com/UA. Okay. Theotrade.com/UA. I'm just throwing a couple of quotes up here, but I wanted to put that in there once again. I'm going to see if I can't answer any individual questions, and I'm going to pop this up here, theotrade.com/UA. Again, just click add to cart. There are 20 riskless spots left, okay? making sure we're good. Any specifics? By the way, somebody was asking a little bit about what's the catapult strategy. Catapult strategy just happens to be, all right, a version of Ultima. Okay, when I say it's a version of Ultima, Catapult ultimately uses the sale of premium, okay, to finance other trades. Okay, the sale of premium to finance other trades. So I hope that kind of answers a little bit about that. So okay. Oh, somebody said just joined in out spreads. Okay. Ultima is very different than in-out spreads. Okay, Ultima is very different. One's premium selling. Okay, one is premium selling. The other one is complete, separation of strategy. So no, they are not really similar in that respect. Making sure that we get these. By the way, I'm just looking at this really quick. All right. By the way, to read off the names, because as I said, there's 20 riskless spots, 20 riskless spots. It takes me about 5 to 7 minutes before I see your name come through here, but here are a few names. Again, I'm just reading off the names that are presently coming through. And the reason I'm doing so is that you know that you're enrolled and you are obviously have got a 20, one of those 20 riskless spots in here. Bianca P from Tennessee, Chris B from Nevada, Patricia J from South Carolina, David P from Washington, Grant B from California, Rick P from Tennessee, okay, Robert D from California, Brian B from Florida, okay, Osama N from Texas. Those are the first handful of names that have come through, and there's 9 or 10 names in there. And again, it takes us a few minutes before we actually see your name populate through. See if I get any more of the other questions in over here. Okay. By the way, international clientele. For international clientele, so we have a Canadian, okay, text message. But if you're like, I'm over in like Australia, you got to use the push notifications. There's just no other easy way. Push notifications, that was actually great. So I am a diehard of push notifications. Okay. My push notifications come through like wear a watch. I'm sorry, but for the price of like $200 now, you can buy, I use the Apple Watch, but you buy any one of the watches. Your push notifications like literally tap you on the wrist. All my notifications come through there. Okay. By the way, somebody was asking, how many notifications do you send a day? I don't, not every day, not even close. Okay. What's going to happen when it comes to notifications? I would say in an average week, you get 2 or 3 notifications. And again, the TheoTheta big and the TheoTheta small portfolio are basically the same thing. One's just done in a bigger construct, one's done in a smaller construct. I would say in the average week, you'll get 2. But what'll happen sometimes is this. You'll have a dry period for 10 days and get nothing. And all of a sudden, a flurry of 5 text messages will come through in 2 days. Like today, okay? I'm going to tell you right now, today, I want to get in there. I want to get in there, and I'll tell you why. I want to get in there because any significant move, we move to this lower line over here. I'm not in technical analysis, but this lower line is the lower edge of the expected move. Okay, that means it's raining volatility at that point. If it rains volatility, it's a good time to sell premium. Okay, when you look at the stocks in the S&P 100 and every one of them is basically down but 3, it's a good time to sell premium. Like the stars are aligning. These are some of the variables that I'll look at. Now, maybe we rally right now and I don't get to sell any premium. I don't care. You know why I don't care? Market's still going to be open tomorrow. But you'll feel like initially, like, I'm not getting enough trades. I'm not getting enough trades. That's okay. I don't want to overwhelm anybody with too many trades. Okay. I'm going to give you just enough, right, that you actually learn and you can start to build more contract size a little bit yourself. Okay. And what people end up doing as well is they're like, oh, this is actually not that hard, and start trading around it and so forth. It's awesome. That's what it's designed for. So in an average week, I would probably say 2 to 3 techs. But as I said to you, there's going to be times where like a dry spell for 10 days, nothing, and all of a sudden, boom, 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 boom. Somebody said, do you need a margin account? Nope. You can use an IRA. Okay. You can use an IRA, which is technically not a margin account, but there is like what they kind of call like, margin IRA. So you can use a retirement account for this, which is not constituted as a retirement account. All right. So appreciate that one. All right. So with that, again, Oh, somebody said, how do I add my mobile number since I didn't add it when you signed up? Yeah, Pat, no problem. Okay, how do you add your number? Want to see? Okay, once you're in TheoTrade, okay, you'll actually come down under portfolios, and you come to the Ultima Theta portfolio. Okay, you enter your email address in here. Okay, enter your email address to opt into text alerts. Okay, to the phone number in your account. If you don't have a phone number in your account at all, okay, all you have to do is just email support@theotrade.com. We'll get you a number in there. No problem whatsoever. So if you want, if you're more comfortable with it, just email us support@theotrade.com and we'll take care of it on our side. All right, no problem whatsoever. All right, with that, again, go to theotrade.com/UA. As I said, there's a handful more names coming through that I'm going to read off. As I said to each and every one of you, we have approximately 20 slots, okay, in here. All right, 20 slots in here. And you're almost completely filled. Stephen J. from North Carolina, Bill M. from Illinois, Daniel R. from California, William M. from Kansas. Those are the last couple of names coming through. And I'm going to wrap things up because, as I said, there's some volatility in this marketplace. I want to thank each and every one of you, okay, for joining us today. It's been a pleasure. I enjoy answering some of the questions that have come in over here. If you need anything, just hit us up, support@theotrade.com. Thanks everybody for tuning in. Have a wonderful afternoon. Bye-bye.